Hey everyone, how's it going? This is Richard, and welcome back to the Stock Market Outlook video sponsored by MarketSmith. As always, we're going to run through the market indexes, talk about a few key stocks, then move on to sentiment from a few different sources, the IBD Big Picture article, and finally the Wishing Wealth GMI signal. Let's dive right in and start with the NASDAQ Composite. Take a look at this in MarketSmith. You can see we were rejected once again at that 21 EMA here on pretty much Thursday, but also brushing against it earlier on in the week. And this week started pretty promising. On the 4th, we had obviously that gap up, a strong close the day before. It looked like we were kind of breaking through the short-term high and potentially starting a new short-term uptrend. But we kind of stalled out here and were unable to kind of retake this subtle gap here. Once again, rejected at that 21 EMA, as I said, and a very negative end to the week, finishing right back at these previous lows. So started out pretty promising. It looked like we could potentially form a little bit of a consolidation here, then carry on upwards. But as I said, we were rejected here and we remain below, declining 21 EMA, 50 SMA, and 200 SMA. And we're still in a bear market, as I've been pretty much saying this entire year. So definitely a negative look. And looking at a 60-minute chart, this kind of shows you that subtle gap I was talking about. If you draw a line right here, unable to retake that, and you can see that we're just kind of back at the bottom of this range, and today was pretty much a trend day to the downside. So that's pretty much it for the NASDAQ. Let's move on over to the S&P 500. This looks very similar. Once again, rejected at the 21 EMA. We're below all the key moving averages, and we remain in a bear market on this index. And it looked like, if you take a look at the weekly, early on we could have a promising week taking out the last week's high. But we basically closed right where we opened right here. Moving on to the IWM, the Russell 2000 index, going back to a daily chart. This looks very similar, stalled out at the 21 EMA, finishing right at the lows here today on Friday. And we're below all the key moving averages as of this moment. And we just have to wait until we can, retake that 200 SMA, start a significant uptrend. And then there will be so many opportunities. I'm really excited for that. And you should be as well. But we're just not there yet. So continue to kind of track things, continue tracking things that are showing relative strength, that are developing, showing more strength than the overall indexes, because those could be the next leaders going forward. Looking at the IWO, Russell 2000 Growth Index, this also was rejected right near the 21 EMA. We're below all the key moving averages, but it's interesting that we're not quite at these lows here like the rest of the indexes, and we're forming a higher low versus this low right here. So a little bit of a divergence and some constructive action here, and relative strength line is increasing over the past 2 weeks. Also taking a look at ARC. This also isn't forming new lows just yet, although definitely negative action this week along with the rest of the indexes, and this has gotten absolutely destroyed below all the key moving averages. Lastly, taking a look at the FFTY. Below all the key moving averages, gap down here today. All these look very, very similar, and you can see that this is been even weaker than the NASDAQ, the SPY, because we're well below these prior lows and just in a bad downtrend as of this moment. So we'll have to see what happens, but right now the short-term trend is back downwards. We were showing constructive action earlier on in the week, but right now the trend is down pretty much on all the time frames. Moving on, I want to run through a few of kind of the mega cap names because those give a great indication of kind of what the big money is thinking. So first thing, look at Apple. Let's bring that up here. This has been in a downtrend below the 21 EMA. You can see the longer term moving averages and intermediate moving average, as well as the 50 SMA and 200 SMA, are now sloping downwards. And we had that gap down, although we remain well above these previous lows. So right now, just a downtrend in all these different time frames, and we'll have to see what happens with this mega cap. Moving on to Tesla, this was holding up a lot better than most stocks back in this area, but we kind of had that failed breakout here, undercut the confluence of the moving averages, rallied into them, were rejected to the downside. We undercut these lows, gap down, and very negative action here. We obviously had them missing some delivery numbers, I believe, but we don't really need to know the reason. Price is news, and we remain in a downtrend on all time frames, although we still haven't undercut these prior lows. Moving on to NVIDIA, chips have gotten hit very, very hard. This is no exception. Rejected at that 21 EMA, and we're below, declining 21, 50, and 200 SMA. I'm going to say that a lot in this video. And looking at AMD, it's very similar, if not weaker. New 52-week lows, I believe, and very negative action today on an increase in volume. Maybe earnings can change things around, but right now the trend is down on all these different time frames. Bringing up Amazon, this is holding up above these lows, but we're still in a downtrend, and the 50 SMA is just starting to slope down here, and we're below declining 200 SMA. Looking at Netflix, this has been holding up all right, actually, over the past few months after it's gone absolutely destroyed here, but still negative action, breaking below this kind of short-term range here, and yeah, definitely an area of interest right here, as well as these kind of overall consolidation lows, and we remain below a 200 SMA. So maybe some late stage 4 action showing here as we're kind of drifting sideways, but we're still below declining 200 SMA. Also bringing up Meta, or actually let's type that in here. You can see this is still in a downtrend. A lot of the mega caps are getting hit very, very hard. Yeah, there's nothing much to say below a declining 21, 50, and 200 SMA, and no real signs of a consolidation. This is maybe the weakest of those mega caps. So that's pretty much a quick run through of those names, and also taking a look at some of the groups that have been holding up well. Let's take a look at solar, the solar ETF, TAN. This was holding up really well. A lot of the stocks in there, EMPH, ARI, FSLR, were acting really nicely, Maxon, but we can see that after we broke that 50 SMA, we're just in a short-term downtrend right here, and a longer-term downtrend as well, back below the 200 SMA, below a declining 21 EMA and 50 SMA, and there's not much mojo going on here. We had this nice breakout on volume, but we're back within that range and kind of choppy period, and this has a lot of work to do. FSLR was holding up a lot better than most of them. You can see a attempted breakout earlier this week into new all-time highs, I believe, but then the very next day, it was completely shot down, failed that breakout, followed through the next 2 days, and we're right up against this kind of short-term consolidation lows. So as I've said before, there's a lot of confluence near that 123 area. You've got this high, you've got the high from back here, which is hidden as of this moment. So if it can find a bottom somewhere near there, I think this is absolutely worth watching. If the overall market can kind of form some short-term bottom, this could form a nice base consolidation here. And it's still holding pretty darn near its all-time highs, given that we're in a correction, still showing a lot of relative strength, as you can see from that RS line trend. ENPH, I'm sure a lot of people have been looking at this one as well. This is definitely weaker. You can see we broke the short-term consolidation here after another failed breakout. Failed right here, formed a short-term rally against the moving averages, rallied back into them from the bottom, and was rejected in a very bad way. I think down at one point 13% on this day. Looks like we closed down 9%, and we're kind of just back at that HVC, which isn't a great look here after it was showing a lot of promise back in this area. So like FSLR, a lot of stocks, this just needs more time. And if you were able to capitalize on some short opportunities back in here or back in here, those were very fruitful. And last week, I believe I talked about CELH breaking the short-term wedge. There were a lot of similar setups to this. This fall through to the downside. You've got wedges here as well. So even the leaders, the stocks that were holding up really well, need more time, and a lot of their structures kind of broke last week. Moving on to some biotechs, this is the area that's probably holding up the best, but still today, ROTM suffered a pretty bad candle here. Vertex, a more liquid name. Let me bring that up. Vertex. There we go. You can see it's moving up nicely, but once again on this Friday, undercut the short-term lows, and maybe it forms out a candle here against the 21 EMA, and then if the market kind of falls through, this can move up. But right now, at least in the very short term, obviously today, not a great candle, although we remain above a rising 21 and 50 SMA and 200 SMA. So definitely showing a lot of relative strength versus the market. Looking at REGN, this is another kind of bigger cap name that was acting super well. Nice move up here earlier on in the week, but we're giving some of that back. But I'd love to see kind of a base in between 750 and kind of the lows of this area. Let that 50 SMA kind of catch up to price, and definitely want to watch because we're right near all-time highs. Earnings and sales weren't great, but you can see the price reaction and some decent fund ownership as well from this name. So that's a quick run through of some important names, and now let's move on to sentiment. Okay, so first starting with my sentiment survey on Twitter, we saw a slight decrease in bullishness from 32% to 25%. This is still actually, reasonably high given the market conditions. I remember back in the March 2020 correction, we got down to 17, 16%. So this can definitely get a lot lower, and I'm kind of surprised how high this is. But, it is what it is. And I always say this, but I haven't said it in a while. Everything sentiment based is completely secondary to the actual price action of the indexes and leadership stocks for me. So this is kind of interesting, but I won't kind of let this kind of dictate my trading. Price action is always number one. With that said, looking at the name exposure next, I saw a slight increase, but this is still relatively low. But it got very low down to 12 back in this area. And you can see the trend down here. We're now at 38. Looking at the put call ratio, this actually decreased over last week. So I'd love to see another big spike here and show that fear is coming back into the market. Looking at the most recent IBD Big Picture article, the headline is Stock Market Correction Picks Up Steam After Jobs Report. LPL Financial still has a look of a leader. I discuss a few different metrics down here, what to do now. And overall, their take is that we're still in a marketing correction, which I 100% agree with. Lastly, we've got the wishing well GMI signal, which is still red since August 29th. And you can see the GMI score on this past Thursday was a 0 out of 6. So overall, my current view is a marketing correction. All the trends are down. Today was definitely negative. Early in the week, I was maybe anticipating a short-term rally, at least for the time being, but obviously that was rejected here on this Friday. So still a time to be very cautious, but also to be doing your homework, working on your system, working on your process, and keeping a list of promising stocks just in case we see some type of bottoming action relatively soon. It's always good to keep tabs on what stocks could be actionable if we do get a fall through day or similar trend change signal. So with that, thanks so much for watching. Let me know your thoughts on this market down below in the comment section. Leave a like down below if you enjoy my analysis, and subscribe if you haven't yet and want to see more videos just like this one every single week, including interviews, tutorials, all that good stuff. Just takes a moment, is completely free. Yeah, with that said, have a great rest of your weekend and take care.